Good morning, everybody. Today is the 26th day in the month of May 2022. My name is Heritage Adisa, market analyst at HFM Nigeria. And quickly, as usual, we'll check through the markets, find out what overall sentiment is, if there are opportunities, and then how we can take advantage of it. But please remember that this is just a communication material. And nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning is another mixed environment. Yesterday we had a similar story, and then this week mostly we've seen a lot of push and pull where markets start this way, and then the next day we are on the other side, and there's so much slight movement, but not anything fully in one direction to give us strong convictions about the move. So I said here, marginal moves are seen across board because there's been a lack of any fresh impactful catalyst. And as well, we have bank holiday in Europe, right? In line with the Ascension, day, which are clearly, keeps prices at bay. Now, equity markets trade within recent ranges. Yes, we started up a bit. Now we've seen some downside again, showing mostly price swings. Right? You look at the Euro stocks, for example, it's down by 0.08% so far. Commodities are largely lower, mostly lower. Oil prices, though, just a little bit, just keeping flat, right? I would say higher, but I mean, the higher we're seeing 0. Very tiny moves, so clearly not anything tangible from that particular front. US oil still keeps above the 110, dollar per barrel level, so which is also there. Look at bond yield side as well, generally lower, generally there. Measures of volatility, some are higher, some are lower, and then you just have so much push and pull generally in markets. And then when you have such environments, clearly, naturally, what comes to your mind is how about you're more patient in terms of looking for short-term, new trading opportunities and wait out for something more tangible or concrete, or better still, leverage on the longer term direction, longer term biases for currencies, and then take trades based on that. Now, late yesterday, we had the latest FOMC meeting minutes, right, where basically just more or less just said again that 50 basis point hikes are expected in the next two meetings, right? That's what most of the most of the Federal Reserve members have been saying over the last couple of speeches that we've had, and that hasn't really changed. It was clearly as expected, and there was no extra hawkishness from the Federal Reserve, right? There was no talk of a 75 basis point hike. As a matter of fact, it's even likely there was even some form of insinuation that it could slow down after the 250 basis points hike over the next two meetings. So clearly that, helped equities a little bit up, right? Feeling such relief and then help the dollar down a bit. But most of those moves have really, really reversed, and then we're back in chops, right? In FX, mostly looking like a risk off tilt. As equities, yes, started lower. So we had that overall, tilt negative, but most of them have really retraced. So clearly just ups and downs what we have. But in FX, that risk of flow is still evident. Safe haven currencies lead. You have the JPY, you have the CHF at the top of the majors. The euro also somewhere up there as well, supported by comments from one of the members of the European Central Bank, that's Knox, where it was said that a 50 basis point hike may be on the table for the July meeting, as much because inflation is the major narrative, and that is to keep inflation back under control, right? So that's on the upside. On the weaker side, commodity currencies are lagging the most. You have the NZD lagging the most. Yes, despite the hike by 50 basis points from the RBNZ earlier this week, taking the rates to about 2%. Right? We had comments from the RBNZ governor where basically he just said that, see, we can't really rule out recession. So clearly that could be one of the reasons why we're seeing, NZD lagging alongside. Apart from that, commodities being lower also weighs on commodity currencies generally, right? CAD being down as well also in today's session. AUD also somewhere there as well. But you look at the dollar mostly is all over the place, sitting at the middle of the park, started a bit lower from yesterday, picked up a bit higher. Now we're back lower, and then we're seeing back and forth. Pairing strength versus weakness. Yes, you could look at NZD-JPY. First of all, today's session, it hits the highs for the week, fell about 0.42% down towards 82.00 support level, and now has bounced off that level, and you're seeing back and forth. CAD JPY as well has also pulled down today's session, falling a bit, and it has cleared out the 99.00 level. Now, I said this very key. Despite the overall cautious mood we're seeing in the market so far, most of the moves are still really all over the place. And when you have environments like that, you want to also be very careful. Apart from that, there's really no clear flow right now. So clearly that points a picture to how about you're more patient with flows right now. And then it could even extend through the session in Europe because of the holidays that we have in Europe. Lower liquidity could cause price action to similar. It could also cause high volatility. So there's that. But later in the day, we're expecting, GDP numbers for the US, initial jobless claims for the US as well, even retail sales for Canada. So all of that can also be, could provide some, liquid, some volatility that we want to see. But for now, the moves that we're seeing are mostly marginal, mostly flat. And in environments like this, it's best to be patient on new short-term trades, new short-term opportunities, right? Just a quick scan across the market. This is a big picture of what I'm saying. A good example of what I'm talking about. Now, you look at this is the US 100. Now, so far today, first of all, yesterday evening when we had the FOMC meeting, we had equities, show some sign of relief, push higher. But since then, into the close, we pushed lower. This morning again, we pushed higher. Now we push lower, and now we're back higher. I mean, this is basically what we call chops. Nothing really tangible there. No clear direction. Mostly ups and downs. And equities are usually the first to show that clear environment, clear direction for markets. Risk on, you see equities moving higher, risk off, they're moving lower. So when they're all over the place, trading within recent ranges, right, something like this, really not going anywhere, mostly ups and downs, it gives you a picture that equity markets generally have not really seen anything tangible to latch onto. And right now, we are really just flowing all over the place in terms of what we have as environment generally. Having said that, you look at the US 500 as well, a similar story there, right? Yes, we shouldn't forget that overall, the overall negative that we've had over the last couple of weeks now on the back of expectations for slow economic growth, central bank tightening amidst high inflation, all of that has not boded well for equities, right? And that has been a negative for equities. But haven't seen the kind of fall that we've had over the last 2 months, right? I mean, we're really, really struggling to keep the momentum to the downside, and then we could see deeper pullbacks, deeper correction, especially heading into month end. So, this period, this time around, having to, jump in on price action is really, really, really tricky. And I think being patient would pay a lot more dividend than trying to just be, too cocky with the moves that we're seeing so far in the markets. Now, crossing over to the FX space as well, you look at NZD JPY. Yes, downside in today's session in terms of the current flows, strength and weakness, but conviction wise, I'm not really feeling this so far. Right now, we're trading at support level around at 82.00, key area of support, resistance, support here as well. If we clear out this in line with slight risk off that we're seeing mixed environment, but weakness in NZD and strength in JPY, right, you should be able to find some support around this key support trend line coming from way back as 12th of May, tested again on the 19th of May, as well as on the 24th of May, and that could be the next area of support. We had hit the highs for the week, and then since then we really pulled lower. It could bounce off these levels, but when I say conviction wise, high probability wise, none of this is on the top of the chart. CAD JPY, like I was talking about as well, has also cleared through this previous support level around 99.1, really very close to 99.00 level, right? Previous support going back to the 19th of May as well as even the 16th of May, right? We've cleared out that level, and right now we are trading lower there. Now, don't forget that we could also get some form of support trend line coming from the lows of Tuesday, right? Also here as well. So I mean, this is also one that we also want to look out for as well. So the moves right now, yes, we could talk about the weakness in the NZD, but the reasons behind them, the flows we're seeing right now, doesn't really bode much confidence. So being patient, like I said, could pay a lot more dividend than trying to force something that's not fully matured yet in the markets. Now, jumping over to the calendar, yes, we're expecting GDP for the US. For quarter one GDP, yes, we're expecting it to contract by about 1.3%. But remember, this is preliminary numbers. So we've already had the advanced numbers as well. So this is more like the second print. So, in terms of volatility, we might not really get so much from this. Initial jobless claims also expected. We're also expecting retail sales as well for Canada. It's bank holiday, in most of Europe, in a big chunk of Europe as well. And then just being patient with the moves that we're seeing, moves are marginal. The ones that are not even marginal are moving very choppy. Yes, hybrid currencies, commodity currencies are lagging, safe havens are leading, but equities are all over the place. Apart from that, it's bank holiday, we're heading into month end, month end. I mean, all of this just says how about you're more patient and wait out for something more concrete before looking to jump in on the price action that we are seeing. So having said that, that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best, to help. Thank you, and do enjoy the rest of your training session. Bye for now.